Welcome traders to this educational video of Nifty Analysis, episode number 28. Currently we are looking at the monthly time frame of Nifty Spot, and what we can see is this particular trend line which I have drawn, which is connecting the lows of 2011, 2013 and now in 2020. We can clearly see that this particular trend line is not allowing the prices to close below the support level of around 83 and 83 to 8500. All right, and even in this particular month, the May month, what we can see is that we have a big candle which is a hammer, and it is being made very close to this particular trend line, and this is a very good sign for the bulls. All right, now let's move on to the lower time frame. In the lower time frame, I can see two things which are slightly positive for the bulls. One thing is that if I try to retrace this entire rise which we saw in the market, and then we saw a small correction. First of all, what we can see is a hammer has been made at a support level, and this is a very decent support of 50% retracement, and after this hammer we can see a bullish bell toll. Generally, a bullish bell toll after a hammer is a very positive sign, and this is surely encouraging for the bulls. And there is a small trend line breakout in the RSI as well. So in the weekly chart also we can see something positive for the bulls. Now let us go to the daily time frame. In the daily time frame, we can see the trend has now changed on the upside. You can see prices have now closed above the 50 days simple moving average, and there is a trend line breakout even in the price. We will be able to see even in Bank Nifty, and this is visible in Nifty also. In this trend line breakout, what we can see 3 days consecutively, we can see prices have closed above this trend line. This is a very good sign for the bulls now. Even the RSI is moving up. So overall things look very, very good. But let me just, now the trend line is poised better. But there is some sort of resistance for the price at higher level. And that particular level is actually not a level, it is a band from 9750, in round figure I will say from 9750 to possibly this particular high, because this is territory which was not being traded. There was a downside gap over here, and then we saw there was a pullback from this price, but this gap has not been filled. So basically from 9750 to 9600, this is a very big resistance. Now, obviously there is if and but in technical analysis. So from my side, things are looking really good, but yes, we will need to close above this 9750 levels convincingly. If you are able to close above this level of 9750 and we carry on the upside momentum, then things look really good for the bulls. We could inch higher and we could test probably 9880 levels. We could test possibly even close to 10,150 and might be even 10,300 levels. All right. So this is the state of trend of Nifty which I wanted to share with you, but be very, very careful that markets are still volatile, and we can see very steep rise and very steep fall in the markets recently. Be careful about your position sizing, and do not forget the level of 9750 unless and until we do not surpass the entire band of 9600 to 9750. We are near a resistance zone. Although we have given a 3-day very good steep rise, but we are near a resistance zone. It can happen that in a short term we could see a dip first and then we could see a rise. So short-term traders, be careful about that. And once 9750 will be taken off on closing basis, and if we sustain above it, possibly for the second day also, then whatever levels I've shared with you could be tested in coming time. Trade well.